This deal has sort of been kicking around now for, I feel like, over a year. The latest offer, $49. They've accepted it. Is this a done deal?
It's been a wild ride since the company struck a deal with Thoma Bravo in December, so it hasn't been a full year, but it definitely, there's been a ton of dissent on this deal. This is Thoma Bravo's third public bid for the company, and they have said it's the best and final. So if shareholders don't like it, it seems like Thoma Bravo will walk here, and this is no done deal. There's still going to be a vote. The vote was originally supposed to be today, and then it was supposed to be a few days ago. So they've been delaying this to see how many shareholders will get on board at this latest price of $49 per share.
Okay, so nothing is a done deal here, but when it comes to that shareholder dissent, what's been the biggest objection? What's their gripe?
The main gripe is price. This was a take-under deal when it first got announced, so it wasn't a great premium. But they've also complained about corporate governance and that this was a hasty sales process. If you read the filings around the deal, they did speak to a lot of potential buyers, but it did come together rather quickly. So we'll see how the shareholder advisory firms will weigh in. They've already been against the deal, but they could still change their minds as we get closer to the new vote.
So were they against the deal, though, because of the price, or is there an argument here that maybe Instructure is just fine on its own?
The argument was over the price and also corporate governance concerns. There were major payouts for executives. Some of the top C-suite executives would have gotten $25 million in the deal, and the CEO hired a sister at one point to join. So there was a lot of that going on in the background, but I think the bottom line was price. Some shareholders we've spoken to still want something in the 50s. We reported that yesterday. So $49 may not be enough. Some analysts are already saying that today.
All right, so close but no cigar. And as you mentioned, there's a new vote date coming up later this month. This is not the only educational software company that's in the M&A headlines, is it? Because there's other stuff going on in this sector.
Bloomberg's reported that 2U, another educational software company, a little bigger than Instructure, has been exploring a sale. There's also an activist there. A lot of these companies went public a few years ago, and they just haven't been performing. The market isn't that big. Once you lock in a few large colleges with your software, where do you go from there? So we'll see. There could be more of these going private this year.